Where does sales and pre-sale sit in the entire chain of activities that are happening in the asset management space?
A salesperson will always be the one who's client facing, but an asset
Mhm.
management firm will have an entire support function that is sitting there to support the salesperson.
How does an investor think, okay, before suppose he has 100 rupees, and will he immediately deploy 100 rupees, or will he immediately release an RFP for 100 rupees, or will he do it in parts?
Most of these institutional investors are already investing with a certain asset manager.
What are the common questions that they ask in RFP, and what makes a winning RFP?
So if there are
Okay.
150 asset managers who receive that RFI as a questionnaire, they look at the requirements. Out of those 150, probably there are 100 who say, you know what, we are not eligible. So let's not even apply for this.
Okay. And how does somebody move from sales to pre-sale, and why he should move, if you can guide?
You want to leave sales and move into pre-sales, not any further beyond that. Pre-sales, in my view,
Okay.
is still considered somewhere between front office and mid office, somewhere between that.
Why have you perceived so many certifications? And first, why? And second, how did this all of these combination of certifications have helped you in your role? Hello, guys. I hope everybody is doing good. Hi, this is Ganesh Nayak. I help finance professionals and students to excel in their career and become a better version of themselves. And I also help students preparing for competitive exams in finance. And as a part of their journey to support their preparation, to support their career, I also talk to people from the industry to understand what is happening in different roles, how to make a great and awesome career in finance. And today I'm with Nikhil, and he's going to be guiding us through what happens in the sales and the pre-sale side of an asset management industry. I have never spoken about this, I have not talked about this in any of the podcasts, and I'm very excited to learn and understand this entire area with Nikhil. So, Nikhil, thank you very much for taking out time and talking to us. If you can give a brief about your journey in the industry.
Sure, Ganesh. Thanks for having me here. It's my pleasure. Um, my industry journey has been about 17 years, out of which my first 8 years started off in sales. I was working with retail banking institutions in India. I was a relationship manager. My job was to go door to door, sell life insurance products, demat products, investment services and products, open new accounts, acquire new customers. That's what I did for the first 8 years, which was a campus placement from Symbiosis. So my
Okay.
career started with Standard Chartered Bank, Priority Banking, which took me to Mumbai. I've been born and brought up in Delhi. So Mumbai was the first stint I had. And then I was there for about 2 years. From there, I moved to back to Delhi, where again I continued in sales with HDFC Private Banking. Once again, the role was pretty much the same, acquisition and revenue generation, target oriented, but it was all retail. So the first 8 years across the various banks I worked was essentially retail, individual investors, and
Hmm.
revenue generations. From there on, I decided to make a switch. I said, I was enjoying the world of sales a lot because it's a very dynamic world. You get to learn a lot. There's tremendous exposure, and but I felt my learning was plateauing a little, and I felt that there's a bigger industry out there which I needed exposure to, because retail is just one side of the coin, and there's a bigger side of the other coin which is institutional. So I said, let's
Right.
let's look for an opportunity that gets me to the institutional side. So I
Correct.
got an opportunity to start writing RFPs with a firm called Moody's Analytics, which you may know now as Equity Knowledge Partners. It's a KPO, Knowledge Process Outsourcing Unit. I was trained into writing RFPs. I'd never written an RFP before, and RFP stands for Request for Proposal. I think we'll be talking more
Correct.
about that later today.
Right.
And then from there, I moved to State Street Global Advisors, which is one of the world's largest asset managers and custodians. And then I had a stint with Goldman Sachs Asset Management, followed by Fidelity, and then now Macquarie Asset Management. In all of these roles, since I moved away from sales, I have been an RFP specialist, and I
Hmm.
ended up leading teams in the RFP world, but largely with institutional investors. And I
Okay.
call RFPs as pre-sales because they are supporting sales. So it's largely a pre-sales function where you're contributing to driving revenue for your firm. So that's
Okay.
largely been
Wonderful.
my journey. And you may have noticed along the way, I've also pursued some academics because I think all of those were quite
Yes.
relevant to the roles I was performing.
Right, right. I'll be talking at the end also about these certifications that you have done. Uh,
Sure.
but for the audience, because so our audience who's going to watch this podcast is going to be somebody who is trying to make a career in finance or primarily want to get into asset management space. So before we go into the RFP discussion, if you can tell us, where does sales and pre-sale sit in the entire chain of activities that are happening in the asset management space?
Right. So, Ganesh, let's take a few steps back and understand the entire cycle of how the sales process is commenced, right?
Okay.
It's either a push or a pull. A salesperson reaches out to a potential investor, or an investor who has funds is searching for an asset manager, right? So that's
Okay.
largely how those conversations begin. A salesperson will always be the one who's client facing, but an asset
Mhm.
management firm will have an entire support function that is sitting there to support the salesperson, right? Because the salesperson is expected to be client facing, have client interest in mind, and just have a massive outreach, just that funnel approach, right? And
Okay.
the support function is just sitting there to equip the salesperson with all the knowledge, literature, and everything else that the person needs to be able to feel better equipped. Now,
Okay.
there are several functions in an asset management firm apart from sales. I'll give you an example of that. There's a performance evaluation, there's a compliance team, there's also a legal team that's sitting there, there's obviously a
Hmm.
research function, there's a portfolio construction team, there are portfolio managers, and there are assistant portfolio managers who are assisting the portfolio managers, and several others who are performing more generic roles. So an asset
Okay.
management firm is actually sort of a microcosm of the entire industry by itself. It is fractal by nature, right? So
Okay.
when you look at it like that, you understand that salesperson is the one who really gets a lot of credit for the work that's done and the revenue that's generated, but it's actually the culmination of a team that's sitting behind the salesperson. Not to
Correct.
mention the technology that goes behind, and today a lot of the hirings are happening in the technology space. So that's where sales fits in. Now let me also come to pre-sales. So when you look at the function of um, I shouldn't call it the function, let's look at the final step where the sales is closed, right? Leading up to
Okay.
that step, there's a very important role that a pre-sales person plays, right? And pre-sales here is RFP. So when an
Hmm.
investor sends a questionnaire, right, making a search for an asset manager, the RFP writer who's representing his asset management firm is expected to respond to that RFP with the
Okay.
answers, and the
Okay.
answers have to be customized and personalized, and the document has to be brilliant and close to as perfect as it can be. And that document, once completed, goes back to the salesperson who will then use that document to make the sale, right? So we are
Hmm.
in effect helping the salesperson, and that's where pre-sales is contributing to revenue generation. So sales and pre-sales work very closely with each other.
Okay.
In my view, if a RFP writer or a pre-sales person does not interact and engage enough in conversations with the salesperson that he's working for or with,
Mhm.
I don't think the pre-sales person is really owning the job. So you got it's really a very closely knit
Okay.
team effort between the
Okay.
two.
Okay. Now, I'm making it slightly simpler. You correct
Yeah,
me if I'm wrong. Okay. Whatever
sure.
I've understood. So there is somebody named, say, like LIC or any pension fund who has got a lot of money available. Okay. And they have to deploy it, and they will be basically giving this money to a lot of asset managers. Correct. So they will
Correct.
be releasing an RFP. Okay. And these RFPs are filled by all the interested asset managers. They
Yes.
will, on the basis of that RFP, on the basis of the pitch that they are making, the money will be allocated, right? Once the
Yes.
money is in, okay, ideally, I'm assuming, ideally, the sales and pre-sales work is done. Then it is the back-end team or the fund managers who are going to be taking care of the interest of the investor. Am I correct
Yes,
on that?
in large part, but I'll add two things there.
Okay.
One is there are several steps to the sales process, and RFP is just one of those steps. Okay, so there could be an RFI that precedes an RFP, where
Okay.
let's assume there are 50 asset managers who've responded to the RFP. Now, what does LIC do with 50 responses? It'll study those responses, but it may not select one. It may say, let me shortlist five for a detailed RFP. So the RFI may have
Oh,
carried very broad based questions, which are simply eligibility sort of questions. So out of 50 asset managers, it shortlists five and sends those five a detailed RFP. Now, once it receives responses to those detailed RFPs, out of those five, it may call three or two for a face to face conversation, right? Which is also
okay.
the third step where the final presentation is made. And then out of those two or three, finally, one asset manager may be selected, or even two may be selected. That really depends on LIC's criteria. So that's part one. So RFP is part of the process. The second thing is, let's assume the sale is closed. The salesperson's or the customer relationship manager's role does not close there, because it's an ongoing relationship. Remember, um, it's not like the relationship is done and dusted and the salesperson moves ahead. This is something which is ongoing. The investor expects to receive regular reports, regular updates on how the
Correct.
portfolio is being managed. And the interesting part, Ganesh, is that once an RFP is completed and a business is won, from there on, the prospective investor has now become an existing investor for the firm. So
Correct.
now the entire effort moves away from acquiring to retaining. So what then happens is the investor would want regular updates on how the portfolio is performing, and if there are
Correct.
any significant changes that have occurred at the asset manager which will materially impact how the portfolio is being managed. So what the investor will do is he will send in a due diligence questionnaire every quarter or every semi-annually or annually, asking us, if there has been a material change since the time I gave you money, let me know so that I can take a decision if you are capable of continuing to manage my money well. So then those
Okay.
due diligence questionnaires keep coming in, and the same RFP writer who had responded to the RFP now responds to the DDQ. So the
Okay.
acquisition effort becomes a retention effort, and the salesperson continues to engage with the investor either to deepen the wallet or to ensure that the investor is satisfied with the work that we are doing, and giving the fulfillment to the investor that we are abiding by all the mandates, restrictions, and the rules that you had put out. For example, the standard deviation on my portfolio must not exceed 20%. So the
Hmm.
salesperson will go and say, you know what, we promised you this. Here's the report. We've not exceeded 20%. It's all good. So it's an ongoing
Okay,
relationship.
okay, okay. Now, two points connected to what you mentioned. So you
Yeah.
mentioned about deepen the pocket. So
Yes.
what I understand is that suppose a investor has already given $200 million, you basically perform and you are asking more money from it. Is that correct?
Yes. More money in whichever capacity. Either the investor is happy with our performance in the existing strategy, so they invest more in the in the current strategy, or if the investor is now looking to diversify into a different strategy, they give us additional funds into a different strategy if we have expertise in managing other strategies as well. And this point becomes relevant for certain asset managers who specialize in, let's say, equity actively managed funds. So it gets
Hmm.
very difficult for those asset managers to acquire investors' capital for passive fixed income side. They're not really beating the competition there, so they can only target
Correct.
investors there. But yeah, deepening a wallet share means getting more funds or more capital from investors in the current or a new strategy that they would like.
Okay. And also you mentioned about like I have as a salesperson I promised 20% standard deviation. My portfolio will stay within that, and it has
Right.
happened. So what my assumption was, they will get a regular update from the backend team in terms of reports and all, and they will get to know about it. Or is it required that the sales team has to do some short presentation again, annual presentation or annual report from their
That's
side
that
also?
That's a very good point, Ganesh. Um, a lot of these terms and conditions are agreed upon and negotiated at the time when the relationship is being set up. And it
Okay,
really depends on the cost benefit analysis, right? For example, is the investor a large investor giving us, say, $50 billion? The investor obviously deserves special attention. So we'll say, you know what, here's a dedicated relationship manager for you, and he will come to you and present it to you. If it's a smaller relationship, but we expect it to build out because it's a large client, right?
correct,
We will not go by the little money we have of them. We will look at the potential to build it out further in the future. We will still give them the attention that a larger existing client deserves. So we'll say, fine, we will go the extra yard. So it's really a cost benefit analysis that happens. These things are negotiated right at the start. Generally, every 3 months or 6 months, a salesperson is not required to go make a presentation. These due diligence questionnaires are completed and emailed to investors. But what's important is that somebody from the asset management firm is readily available if the investor wants a meeting or wants to
correct.
call out anything specific.
Correct. Now, before we go to the RFP, one more thing which I want to understand is how does an investor think? Okay, before suppose he has 100 rupees, and will he immediately deploy 100 rupees, or will he immediately release an RFP for 100 rupees, or will he do it in parts?
Interesting, Ganesh. I've come across a few instances where I've seen a bit of all of that happening. But to
Okay,
generalize, what I can say is, um, given that we are dealing with institutional investors here, most of these institutional investors are already investing with a certain asset manager.
right.
Now, given that they're already engaged with an asset manager and they tend to be contracts which last several years, these are not weekly or monthly contracts, the contracts last several years, it's very difficult to poach an investor away from another asset manager until and unless the
Okay.
investor is for some reason dissatisfied with the performance or is more impressed with another asset manager. So
Okay.
let's put, Ganesh, put yourself in the shoes of an institutional investor. Let's
Hmm.
say you're already engaged with BlackRock for the last 10 years and BlackRock has been doing a decent enough job. It has been exceeding your expectations, but
Right.
nothing which is out of the world. You said deliver me 14% annualized returns, adjusted for inflation and limited standard deviation. And you said I only want exposure to emerging market equities, don't go beyond emerging markets. So you gave your set of constraints and BlackRock has been doing a fair job with it. Now you hear of a new asset manager,
Hmm.
which seems to be like the new kid on the block, but is very highly specialized. It's putting technology, artificial intelligence, and you want to try him out.
Okay.
So you would not mind giving a little part of your capital to the new asset manager, right? And then
Hmm.
over time assess how the new asset manager is performing, and then over time build up that part of the revenue. So I've seen
Okay.
that happening. What I've also seen happen is that you put BlackRock on, let's say, a suspension and say, you know what, I'm going to try other things out. Let me take the capital away and park it elsewhere and see how that goes. But generally speaking, Ganesh, when an investor is already sitting with an asset manager, the investor becomes a little sticky. So you got to be exceptionally good to be able to poach that investor away. And sometimes, very quietly, we
Okay.
hope that they are dissatisfied with their current arrangement so that we can step in and poach them away.
Okay. Okay. Interesting. Interesting. And so I have two questions. First, two questions related to RFP.
Yes.
Like you mentioned, the initially they ask you the RFI, okay,
Yes.
and then it goes to RFP. What are the common questions that they ask in RFP, and what makes a winning RFP?
Sure. Sure. Okay. So, let's say you are an institutional investor again. You are searching for an asset manager. You have your set of constraints that you want the asset manager to stick with, and we'll look at the same constraint that I mentioned here. You only want your money to be invested in emerging market equities, limited
Correct.
standard deviation, etc., etc., right? Those set of
Correct.
constraints. And let's say I'll add another important constraint which is very commonly found. You want the asset manager to have managed emerging market equity portfolios for, let's say, the last 25 years. You want to see a track record for 25 years, right?
Oh,
Now, it's quite obvious that not every asset manager on this planet will be eligible to manage that money. So
correct.
this becomes an RFI because this RFI is more of an elimination process. This is not a selection process. So if there are
Okay.
150
Okay.
asset managers who receive that RFI as a questionnaire, they look at the requirements. Out of those 150, probably there are 100 who say, you know what, we are not eligible. So let's not even apply for this. And then there are 50 who say, okay, we are eligible. We are qualifying the constraints the investor has posed. Let's write that RFI and respond to it. So those 50 RFIs arrive at the desk of the
Okay.
investor. Now, from those 50, then the investor will say, okay, fine, I got these 50. Now let me shortlist, say, 10 and send them a detailed RFP. Out of those 10, I will shortlist 3. Now, an RFP is generally more detailed. So, as an example, an RFI may carry 20, 25, 30 questions. An RFP could range anywhere between 100 to 500 questions. And
Wow.
yes,
Okay.
yes. And these questionnaires could be a mix of qualitative questions as well as quantitative questions. I'll give you a few examples
Okay.
on both sides. On the qualitative side, Ganesh, you, the investor, you may ask, how is your portfolio management team set up? What is the depth of expertise each portfolio management member has? What is their level of expertise? What is their experience in industry, right?
Correct.
You may want details of where all have they worked, because you want to see if there's a star portfolio manager, has he been hopping firms?
Hmm.
Which means that if you invest because of a star portfolio manager and you see his track record, he's been hopping firms, he's not going to be around for too long. That does not give you a lot of confidence as an investor. Then on the
Correct.
qualitative side, you may ask, what is the technology integration in managing my money? Are you relying on
Hmm.
technology? And if you are over relying on technology, I want to understand where is the manual intervention? What sort of compliance
Right.
monitoring do you have? I've given you compliance constraints, right? How are you going to be able to monitor those constraints? Is this being manually done? What are your audit procedures? So, an RFP on the qualitative side can be very tedious, a lot of questions which somebody on the outside may not have anticipated. So if there's a newcomer entering the industry and says, I'm going to be an RFP writer, give me a question, I'll respond to it. He will study the RFP with 500 question and say, where is the strategy level question, where is the portfolio level, where is the asset class question, because this is all that I've studied in my CFA. But an
Correct.
RFP will go way beyond that. It will ask you to address all of those concerns that the investor can potentially have, right? On the
Okay.
quantitative side, the investor may ask things like, um, give me a composite portfolio which is representative of the strategy that you're going to be handling for me. I want to understand what has been your track record, so present data on those lines. Give me data on what is your human resource strength. How many investment professionals do you have, and how many
Okay.
non-investment professionals do you have? Non-investment are legal, compliance, HR, and all of those, right? So
Correct.
it
Correct.
may ask for data on those lines. One of the most common questions that we are finding investors asking in RFPs now is, what is your ESG integration? Where are your sustainability efforts going? How are you engaging with your portfolio companies? Are you greenwashing or you're not? Are you signatory to the principles for responsible
Wow.
investing, etc., etc.? So all of those concerns that investors have, they will put out in those RFPs, but they're very, very detailed, very exhaustive, Ganesh.
But so basically, when we read about from in the CFA curriculum also, we read about GIPs, which you mentioned about the composite. So
Yes.
those presentations with the details and all has to be also prepared by you guys, and will go the sales team
Yeah, so the
for that.
RFP writer will not prepare those. RFP writer is really a person who is collating all the information from everywhere, from every part of the asset management firm. We are
Okay.
information gatherers, and we are the ones who once gather all the information, put it in such a way that the RFP is responded well, and that document in the end turns out beautiful. So that the investor, when reads that document, is impressed with the firm. So we are really information gatherers. Now, and the RFP
Okay.
writer has a repository of information, but that repository may not carry all the information needed. So we are required to reach out to the specific subject matter experts. As an example, so when the RFP says, give me a composite of your performance for this
Hmm.
particular strategy that I'm interested in. The RFP writer, let's say I'm the writer, I don't have the composite ready with me. I will reach
Correct.
out to the performance specialist and tell them, this is the question, this is the context, give me the composite. They will provide the composite. I will fit it in the RFP where it needs to go. So, an RFP writer's job in very large part is ensuring that they are engaging with the entire world. It's not a job that can
Okay.
be performed sitting in a silo by yourself. It's a team effort.
And what makes a good RFP?
Number one, you've got to address investors' concerns. So with an RFP, there's a little write up that the investor gives, which gives you a little context to why the RFP has come in. Either the
Okay.
investor says that I'm looking to move away from my existing relationship, or the investor says that I'm entering fixed income. I've never
Hmm.
invested in fixed income. It's the first time I'm getting there. So when you read that little backdrop, you understand where the investor is coming from. And then with that understanding, you write the RFP such that you're addressing the investor's concerns. That's number one, very important. Okay. The
Okay.
second thing is, um, you've got to make sure that you're speaking in one voice, Ganesh. And what I mean by that is, let's say I'm the RFP writer.
Hmm.
I have a certain set of information available with me. I look at a questionnaire. I respond to the best of my sincere abilities. I respond to that RFP. That RFP goes to the salesperson, and that salesperson uses that RFP in making the presentation and the pitch to the investor. Now, what
Okay.
if the salesperson's approach to pitching is different from the RFP writer's approach to preparing that document? Right?
Okay.
So we got to speak in one voice. It's important. It should not appear that the RFP is speaking one language and the salesperson is speaking a different language, right? So it's got to speak in one voice. It gives a sense of cohesiveness to the investor, right?
So you have to
And
brief the sales guys also on
it's more the other way
what
around.
to.
It's more the other way around.
Acha. Okay. Okay.
Because the
Okay.
salesperson is the one who's eventually going to meet the client. The salesperson tells us, guys, this is the RFP that's come, and this is what I feel is the best way for us to approach. Because the salespeople
Okay.
tend to know a lot of investors and clients from the market, and they know what's selling and what's the best way to approach that situation. So we will be in touch with them so that we are able to align our approach with theirs. So it's really inputs that come from them, because they are eventually the ones using the RFP to make the sale,
Correct.
right?
Correct. Correct.
And
Correct.
lastly, but very importantly, Ganesh, what makes a winning RFP is that there should be completeness, comprehensiveness, and yet blended with simplicity. What you don't want is too much jargon in a document. Imagine a document with 500 questions can go about 250 to 300 pages, The last
Right.
thing you want is that the investor is reading 300-page document and opening a dictionary or googling every term that you're going there. It's got to be easy to understand and comprehensible.
Correct. And how much time generally it takes for you to fill the entire RFP and send it to the investor?
That's a very valid question, Ganesh. And in fact, this is the burning question that every candidate asks. Okay, because
Okay.
RFP writing is hazardous. Okay, and I say hazardous because it comes with very short deadlines. Every RFP is called a project. So generally, the investor will ask for an RFP to be returned in about 7 to 10 business days. Now,
Oh,
7 to 10 business days may sound sufficient sometimes, sometimes may not be sufficient. But what makes it difficult to work around that 10 business day approach is that you're not the only one who's required to work on the RFP. There are multiple
correct.
people required to be there, and there are multiple level of reviews, and then eventually there's probably a legal and a compliance sign off that has to happen before it goes to the salesperson, because they've got to certify that everything, the contents of that RFP are good to go out in the public world, in the public
Correct.
domain. And so much of follow up required. And the most I would say challenging part of an RFP process is if you're relying on 15 other people to give you inputs to an RFP, and there's one
Hmm.
person who's not available or is very occupied, is not able to give you input, you can't close the RFP. You cannot send an RFP back telling the investor, you had 500 questions, we've answered 450, we could not answer 50 because somebody is not available. It leaves a bad impression.
Correct.
So
Correct.
there's
You
so much
cannot
of
send it.
dependence. Yes.
Okay. Okay. And how does somebody move from sales to pre-sale, and why he should move? If you can guide.
See, I think I can speak for myself. Um, Sales to pre-sales, as I've already alluded, happened because I wanted a different exposure, but I did not want to move too far away from sales because I felt the
Hmm.
world of business development was very dynamic, etc. So I didn't want to move too far. Plus, I think sales is where a lot of growth is and a lot of dynamism is. You're a profit center. You're not a cost center.
Correct.
Now, why would somebody move? Let me try and generalize this. Why would somebody move from sales to pre-sales? Number one, if the person feels that sales is too much pressure to handle, right? So you may want to move to a place which is a little bit of a less pressure. Second,
Okay.
if you feel that you still want to be center of attention, which means you want to contribute to revenue generation, anything which is not pre-sales, Ganesh, and not sales effectively is operations and backend in many ways,
Right.
right? So
Correct.
if you're not somebody who wants to sit in the back end performing operations or research where you're never really interacting with the client, you're never even interacting with salesperson, you don't know the work that you're doing, how is it contributing to the larger cause outside, because your world is limited to what you're doing. You want to leave sales and move into pre-sales, not any further beyond that. Pre-sales, in my
Okay.
view, is still considered somewhere between front office and mid office, somewhere between that. So you still remain close to
Okay.
the client because by virtue of writing RFPs, you're working closely with sales. So you know what's
Correct.
happening in the industry.
Okay. And why have you perceived so many certifications? And first, why? And second, how did this all of these combination of certifications have helped you in your role?
Each one has a story, Ganesh.
Okay.
So I registered for my CFA in 2010. I started in the industry in 2008. So it took me 2 years to realize that there was something like a CFA out there in the world. I didn't even know. And this is quite an interesting story, Ganesh. Um, I give so much credit to this one gentleman who's shaped my career, my understanding of what a CFA charter can do and how your career should be shaped. He's been my mentor throughout all these 17 years. I've been in touch, and I continue to convey all my gratitude to him. And I'll tell you this little story if I can take 2 minutes here.
Yeah.
Um, when I was in sales back in Standard Chartered Bank, my first day on the job, Ganesh, was the day that Lehman had collapsed. Okay, that was my first day on the job
Wow.
in my life. And I remember my manager taking me to Bandra, and he took me to a residential complex. And he says, Nikhil, look around you. What do you see? I said, I see a lot of apartments. He says, no, you should see a lot of wealth. I said, that's an interesting way to look at
Wow.
it. So he
Wow.
says, and by the way, this is just my day one on the job in my life. And this is the day that
Okay.
Lehman had collapsed and the market were melting down. He says, Nikhil, what I want you to do is go knocking on every door in this particular society, get me the contact number of the decision maker from every household, come back to office, call on those numbers, set up appointments, take me along with you. I will try to close those calls, generate revenue, and you will get the shadow credit for it. I said, that's simple enough. Let me do it. Ganesh, you won't believe there are about 50 houses that I knocked on, and there were 45 who did not even open, or among those 45 were those that shut the door after looking at me, right? That was my day one on the job. I got about 3 to 4 contact numbers, which I could never set up appointments for. So that was my day one. And the next 3 years were not any different. That's exactly what I did for the first 3 years. I was on the ground, knocking doors, collecting numbers, making calls, setting appointments, and hoping
Correct.
that my seniors would close those calls and generate revenue for me to get shadow credit. Now, when I tell somebody about this today in the offices I work, they say, Nikhil, we can't believe you did that. But it's the reality, Ganesh. I give a lot of credit to the work that I did then. Now let me come to the story of CFA. So along the way in 2008,
Hmm.
I met one client who was back then working with Macquarie Asset Management, where I am now. The world is a very small place.
Hmm.
Um, I met him for the first time. He was a managing director at that firm, and he gave me his visiting card, and I read his name followed by CFA. And I was wondering, what is this CFA? Believe me, Ganesh, at the time I didn't even know what a CFA was. This was back in 2008, 2009. I said, interesting. And then I asked myself, I said, I'm a Symbiosis MBA. He is an IM Ahmedabad. How do I bridge that gap? I'm not going to do a second MBA. So I came home that evening and I researched on what a CFA is. And I understood it's a gold standard in the financial industry. If you're an investment manager, then a CFA is a must. And I said, well, this is my bridge. And then I pursued my CFA simply because I wanted that title just like that client did. And he was a very, very smart person and continues to remain. He's the head of institutional research at one of the largest Indian asset management companies today. He's doing very well for himself. So he inspired me to research about CFA and then pursue the CFA because I wanted to be like him. And that's how
Correct.
my CFA journey started. And I always had him at the back of my mind when I was, sitting with my books. My CFA, my FRM, my CAIA has all been done along with my work. I did not take a break from work. It was all done with my work. And which is where, when I interact with students today and they say, "Sir, I've taken a break from work because I want to complete my CFA," I'm say, "No, please don't do that. Your work is very, very important because you're adding to your work experience. That's so critical." So that
Correct.
gentleman there inspired me to do this, and everything I've pursued since then has been keeping him in mind. Why did I do my FRM? When I started writing RFPs, there were a lot of questions coming in with regard to risk management. And frankly, Ganesh, as much as you study about CFA, I think there's a risk management aspect which is not really covered in a lot of depth. And I thought that I was missing out on a very important pie of the investment management sphere. So I pursued my risk management because it was relevant at that time. And then my CAIA back in 2021, which is alternative investments, simply because 5 years back I knew AI had already alternative investments had become big.
Hmm.
Back in 2008, an average investor would invest about 5% allocation to alternatives, and by 2021 that had grown to 14-15%, and that's going to grow to 25-30% by 2030. So I knew that this is going to be big. I might as well pursue it. So this was very, very futuristic for me. And then an SCR which I did was the sustainability and climate risk. I've already expressed my interest in sustainability, and again this was more futuristic, knowing that sustainability is here to stay. So I
Correct.
felt it's good to dabble in those things. It's more like that.
Wonderful, wonderful. Now, you have already covered a lot of my questions, which I was thinking that I will ask you, because a lot of students they think about these exams that okay, I'll complete this, like you mentioned, I will complete this everything, and then I'll start the work. Okay, now if you can give them some advice, okay, that how should they look at these certifications, okay, in as a tool to enhance their career, any certification basically.
See, the first thing is, Ganesh, they've got to understand what is their motivation to pursue that certification. If the motivation is misguided, like mine, by the way, I call my motivation misguided because my motivation was to be like somebody. It wasn't really because I didn't know what the certification will eventually get me. I just wanted to be like somebody, and I don't think that's the best guidance. So I like to ask students, what is the reason that you want to pursue this? More than 75% of those who drop out of the CFA eventually are those who did not understand their own motivations to write the CFA. For them, it was either the glitter and the glamour that comes along with it, or a
Correct.
compensation growth that comes along with it. But frankly, Ganesh, it's such a long journey for some people who don't clear in the first attempt. Such a long journey. It took me 5 years. That motivation itself does not sustain. What endures is inspiration. So you got to get your motivation right. That's point number one.
Correct.
What is a good inspiration to have when you write? or prepare for your CFA, or you decide to register for a CFA? Learning, not earning, right? It's something I heard Stephen
Wow.
Bartlett in one of the podcasts yesterday, so I'm just quoting him so the credit goes to the right person. Learning, not earning. If you have a learning mindset, I feel you're going to extract more from each of these certifications, and it'll have a leveraged effect on your career eventually. If you have an earning mindset, all of these things will eventually lose their shine, right? That's number one. The other is, there are sacrifices to be made, Ganesh. There is no doubt about that. For the 8 9 years after 2008, when I completed my MBA, I remember I did not have a social life. I think I lost more friends than I made in that time. I don't feel pity for myself, because I know that there's a lot that I've gained in the process, and I'm very happy that I put myself through that. But you
Okay.
got to be prepared that you got to make a lot of sacrifices. I think it's even more challenging, Ganesh, today for somebody to pursue these things, because there are more distractions today than there were earlier. But that is
Correct.
where the opportunity is. If you can focus, just focus better than others, you will stand out. But in my time, everybody was highly motivated, so for me to stand out, it was, I had to do something very very different, right? So
Okay.
it's more of introspection and answering your own questions, rather than looking at the outside world and waiting to be inspired, that I keep telling students about.
Okay, interesting. Now I have one last set of questions focusing more on interviews. Okay, the first
Okay.
is, how can a student crack any interview? If you can give two or three tips.
Yeah. um there are several things that come to mind, Ganesh, but I'm just trying to organize the priority in my mind so that the message goes out very right. Ganesh, I've been interviewing for about 12, 13 years. And I think the one thing that stands out for me is the first 6 seconds, 10 seconds make a very big difference. Okay. So your first impression is very, very critical. It does
Okay.
not mean that you can't change a wrong first impression. I'm not suggesting that, but it just becomes more difficult from there on. That's important. So, what should a person do in those first 10 seconds? Appear confident, appear like you belong there. That's very important. And the word I'm highlighting here is appear. You may not genuinely feel like it, but you have to give the impression, right, that you belong there.
Okay.
That's important. Okay.
Okay.
Second thing, and very very important, Ganesh, is in my view, authenticity, which means believability. So when I'm interviewing somebody for a role, let's say on my team, and the person's got a very strong resume, the person comes across as relatively sincere, has a decent experience, and I feel that yes, there are transferable skills the person can bring, but somehow just the way the person's coming across does not give
Hmm.
me the impression the person's being very authentic. The believability factor reduces, and from there on, that faith and the trust does not establish. And I think this is one of the things that is very vastly undermined, in the
Okay.
interview process, the authenticity. And the other is asking the right questions, Ganesh. In fact, I tend to open the last 5 10 minutes to questions from candidates, but I have a very very keen eye to watch and observe what kind of questions are being asked. It tells me a few things. Number one, the smarter the question, the more research the candidate has done. That's point number one, which is great, because they will only do research when they're interested in the role. The other thing
Correct.
is, when they're asking smart questions, I understand that they have a mind that is working in a fashion that they're able to connect the dots. I'll give you an example. Okay, let's do a bit of a role play. So, let's say, Ganesh, you are interviewing me for a role in your asset management firm. You've interviewed me for 25 minutes. You say, Nikhil, let's open this up for 5 minutes for questions from you. Can you please do that so that we can actually have that role play? So, you just open
Sure.
it up to any questions from me.
So Nikhil, it was a very good interview. But I want you to ask me a few questions if you have it in your mind.
Sure. Yeah. Ganesh, first of all, thanks for your time. This has been very, very helpful. I was looking up your website, Ganesh, and I found that the asset management firm has ventured into retail banking. I was under the impression over these last few years, having read and been in industry, retail banking was a very competitive space and overbanked. I'm just wondering, does it come across as moving away from your strengths, or is there a bigger strategy around this? Could you just throw some light on that? Now, Ganesh, the first impression you get when you hear me asking that question is, this may not be specific to the role, but it tells
Correct.
you I've done my research. Number one, I have been interested enough to go on the website. And not only am I just reading stuff, I'm even assimilating, absorbing, and I'm putting my mind to it. And I have the maturity to connect the dots and look at what your firm has done and put it in the perspective of what the larger industry is doing out there, right? That's one
Correct.
example, a very smart question to ask. Now, where this question really helps is if you don't know the answer. Believe me, I'm not trying to make you lose face, but I'm trying to put you under the scanner, Ganesh, so that now you try to impress me. You see how the tables turn over the course of an interview, right?
Right.
And then the other thing, Ganesh, is as a candidate, never approach an interaction as an interview. It is an interaction. Give the impression that you are as much interested in learning if the firm is a good fit for you as the firm is trying to gauge if you're a good fit for it. Then
Okay.
with that approach, what will happen is you will you will have a bit of a critical mindset where you will automatically start thinking about smart questions to ask, and you will not give yourself away and say that, you know what, I just want a job, give me the job, because that's not what you want at the end of the day as well, right?
Okay.
So I think it's a matter of an approach. And then one more thing,
Okay.
Ganesh, that strikes me is a lot of times candidates, especially young candidates, get a little intimidated by tough interviewers, or let's say
Right.
stress interviews. My suggestion there is very, very simple. Be bold and mature enough to stand up to it. Number one, recognize what's happening. People are not tough. They don't want to be tough. They, in fact, want to get the best out of you. They are presenting a tough, facade only because they want to put you under the pressure and see how you would perform on the job, because probably the role demands you to be resilient. So understand what the interviewer is trying to do. Don't let it affect you. Do not take it personally. Just like your exam, where you've been preparing for the last 10 months to write an exam and you need to peak on the day, interview is the same. You've been preparing for it and you need to peak on the day. So do whatever it takes for you to stay mentally, at the best possible level. That's largely what it
Wonderful.
is.
Wonderful. In fact, I had three, four questions connected to interview, and I think so. In your conversation, we have covered all of them. So wonderful. And this is the last section that we generally do with our guest, is that we basically ask them a rapid fire question and ask them to answer it fast. So shall we
Okay.
start on that?
Sure, sure.
Okay. So first question is, one skill every student must learn:
Soft skills,
academics or certification.
certifications,
Biggest interview mistake students make:
trying too hard and being inauthentic,
one habit that helps students stand out.
networking.
Okay. One resource every student should use daily.
You must you must journal and create your own repository of your own thoughts and your experiences. Journaling is very, very important. You don't otherwise learn over the years.
Wonderful, wonderful. Again, Nikhil, thank you very much. I think this conversation is really exciting. Okay, I learned a lot of things through this conversation, and I'm sure the audience will also learn what is happening in the sales side of the asset management space, which I think so nobody generally talks about. Everybody talks about how the fund manager works, how the valuation works, what is happening in research or portfolio, but nobody talks about what is happening in the sales side. So your conversation will really, really help all the students and the candidates who are planning to enter into asset management industry to make a better decision in their career. So again, thank you very much, Nikhil, for taking out time.
Thanks, Ganesh, for having me. It's my pleasure.